By ordering a depreciation schedule and claiming on the deductions on her brand new townhouse property, one of our clients was able to save $5,722 in her first year of owning the property. Here's how. Hey everyone, Andy Trin from Tax here for another video designed to help you become a better property investor. Here at Tax, we believe that the best way to educate our viewers on the importance of getting your hands on a tax depreciation schedule is to show you exactly how much of a difference it can make. Not so long ago, we had a client contact us after hearing about depreciation and how claiming deductions can be a useful tool in maximizing her return on her investment property. She was already convinced that she wanted to order a depreciation schedule, but for interest's sake, she wanted to see exactly how much she would be saving with the report versus without it. And you won't believe the results. In this video, I'm going to show you exactly how much our client was able to save and why her depreciation schedule made all the difference. So if you've just bought an investment property that's a townhouse and haven't ordered a report yet, make sure you stay tuned. But before we start, we want to be clear that this video is for informational purposes. In no way should you interpret this as financial or tax advice. We always recommend working with a qualified financial advisor or tax agent to give you the best advice for your situation. Okay, so let's get started. Our client, let's call her Mia, purchased a brand new townhouse for $690,000 last year and decided to rent it out immediately after buying it. She rented out the property for $510 each week, which gave her a yearly rental income of $26,520. Obviously, she had a few expenses to cover, like her interest repayments, management fees, rates and maintenance. Because she invested in a brand new property, her tax deduction can actually make quite a difference to her bottom line. In fact, she can claim deductions for the depreciation on the property's plant and equipment assets. Plus, she can claim capital work deductions. Before we get back into Mia's case study, I'll quickly explain what each of these deductions mean. So plant and equipment assets are the fixtures and fittings you will find in your investment property. They're generally considered easily removable assets and include things like carpets, blinds, air conditioning units, vinyl flooring, and light fixtures. The ATO recognizes more than 6,000 different assets that investors can claim depreciation deductions on. Capital Works deduction relates specifically to the depreciation of the structure of your investment property, so the actual building. With plant and equipment assets, or what the ATO calls Division 40 assets, you can claim depreciation over their effective life, which could be over 8 or 15 years. It all depends on how long the asset lasts before it needs to be replaced. So depreciation for these assets are a lot quicker than the capital works depreciation. With claiming depreciation of the building, you're looking at an effective life of 40 years. That means your depreciation rate is calculated at 2.5% each year for 40 years. Okay, so now that's out of the way, let's have a look at a cost breakdown that shows Mia's cash position after claiming depreciation and what her cash position would have been if she didn't order a depreciation schedule. Let's start by looking at how things would have progressed without a depreciation claim. After deducting her annual expenses from her annual income, her pre-tax net income is minus $10,543, so she's actually running at a loss. Mia currently falls in the 37% tax bracket, so the refund for her tax loss ends up being $3,901. If you add that refund onto her loss, she would have to pay $6,642 each year to own that property. That is a weekly loss of around $128. So that's without claiming depreciation deductions. Now we know she ordered a depreciation schedule from Tax, and according to the report, Mia claimed $15,600 depreciation in her first year. So if we were to add her depreciation loss to her pre-tax loss, her total taxation loss would be minus $26,143. The bigger the loss, the bigger the refund. So this means that Mia was able to get a tax refund of $9,000 $673. That's quite a difference compared to the refund that she would have gotten without the depreciation. So if you add the refund onto her loss, she would have to pay $870 each year to own her investment property. That's a weekly loss of less than $20. So each week, she's saving $111. But that translates to a savings of $5,722 each year. Now, if you ask me, that's definitely going to make a major difference to Mia's bottom line. And the great thing about her depreciation schedule is that it's valid for up to 40 years. So Mia can continue saving money each year as long as she continues to own the property. So there you have it. As you can see from Mia's scenario, tax depreciation schedules can make a significant difference in an investor's cash flow each year. Without depreciation, Mia would have had to pay $128 out of her own pocket each week. However, by taking advantage of the ATO's tax breaks and making a depreciation claim, Mia reduced that amount to only $17. Obviously, ordering a depreciation schedule will come at an extra cost. So if you're still feeling unsure about committing to ordering a depreciation schedule, we have designed a tax depreciation calculator to help you estimate what you could potentially claim on tax depreciation. This is an accounting tool designed to help estimate and calculate the declining value of capital works and plant and equipment assets, and relies on accurate figures to present accurate estimations. This tool is completely free, so make sure to check it out. I've left the link in the description box below. Anyway guys, I hope you found this case study valuable. If you did and you would like to order a tax depreciation schedule, get in touch with one of our Duo Tax quantity surveyors today. We'll ask you a few simple questions over the phone to see if your property qualifies. If it does and you're happy to go ahead, we'll get started on preparing the report, and then within 5 to 10 business days, we'll have your personalized report delivered to you and your accountant so that you can start claiming your deductions. If you know of anyone who could benefit from ordering a depreciation schedule, make sure you share this video with them. Otherwise, make sure to check out our YouTube channel to subscribe for more property investment tips. I'm Andy Trin from Duo Tax. See you next time.